Welcome back to Investing Talk Podcast.
Today we're looking at Centrus Energy. This company is right at the epicenter of the global nuclear renaissance.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. We'll start with the core fundamental thesis, the growth story there.
Right.
Then we can look at their financials, their moat, and then maybe finish up with the risks and what's coming next.
Okay, let's unpack that opportunity first, because when you say epicenter, you're talking about something very specific, aren't you? It's not just building reactors.
Exactly. It's about the fuel. While Centrus supplies standard low-enriched uranium, their strategic advantage is in something called LEU.
HALEU.
Right.
High assay, low enriched uranium.
That's the one. Think of it like high-octane gasoline, but for the next generation of nuclear reactors.
And why is that so important? What's the advantage?
Well, it's a structurally privileged niche for a couple of reasons. First, you need HALEU for most of the new advanced reactors, the SMRs that are being designed.
The small modular ones.
Yep, they're smaller, safer, and everyone wants to get them deployed fast. And second, making HALEU is it's technologically very difficult. It needs a much higher level of enrichment.
So a high barrier to entry.
A huge one. Plus, there's immense policy support from governments who are, frankly, desperate to find reliable suppliers.
And you can already see that support showing up in their results, can't you? I was looking at their 2024 top line. Revenue was around $442 million.
It's a huge surge. That's about a 38% increase year over year.
Wow.
Yeah. And that kind of growth tells you two things. One, demand for nuclear fuel is just incredibly strong. And two, Centrus is actually delivering on its contracts. They're executing.
Okay, but here's the part that I found a bit confusing, and I think a lot of people might see this as a red flag. That great revenue growth, it didn't flow down to the bottom line.
No, it didn't.
Their net income for 2024 was actually down about 13%. So what's going on there? Why that disconnect?
That is the absolute crucial piece of the puzzle here. And it's why you can't just look at a single P&L statement. That drop in profit isn't about the business getting worse.
Okay.
It's about two things. One is just some volatility in their contracts. But the big one, the important one, is that they are investing heavily in growth.
So what kind of investments are we talking about here?
They are pouring capital into their capabilities. Specifically, this massive HAU infrastructure they're building in Southern Ohio, they're spending on the fixed costs now.
Like equipment, regulatory stuff.
Exactly. Centrifuges, compliance, testing, skilled staff, all before the big commercial orders for HAU really start rolling in.
Yeah.
So they're sacrificing today's profit for tomorrow's market share.
So it's an investment phase, and if they get through this phase and the volume kicks in, those fixed costs get spread out and profits could really jump.
Yeah, precisely. That is the definition of operating leverage. If they can run that facility at capacity, their margins could expand dramatically. The market is looking past today's lower income to that future potential.
We did see some weakness in their last reported quarter, though, Q3 of 2025. They missed estimates. That must have spooked some people.
It did, and that's understandable. But look at what's expected for the next quarter, Q4. The consensus revenue target is around $149 million.
$149 million. Wait, compared to what they just did?
The prior quarter was about $75 million.
Wow. So the market is pricing in basically a doubling of revenue from one quarter to the next.
It suggests those deliveries that slipped from Q3 are just moving into Q4. It's a timing issue. The bull case is clear. You have accelerating revenue into a super tight market and earnings that are being held down on purpose for strategic investment.
It's that classic invest now, profit later story. And
it's all driven by this global need for energy security.
Okay, that brings us right to their financial strategy. You can't fund that kind of massive build-out without a very strong foundation. So how does their balance sheet look?
It's exceptionally strong. They have about $1.6 billion in cash, and critically, they hold more cash than they do debt.
That's always a good sign.
It's a great sign. And if you look at their liquidity, their current ratio is about 3.5.
And for anyone who doesn't follow these metrics, a current ratio of 3.5 basically means what?
It's a huge safety buffer. It means they have $3.50 in short-term assets for every $1 of short-term liabilities. It just it de-risks this whole capital spending phase. They have the cash.
But let's talk about the elephant in the room when it comes to funding, the ATM program. The at-the-market offering. It allows them to issue up to $1 billion in new stock. That word dilution makes a lot of investors nervous.
And it's a fair concern. It did pressure the stock.
Yeah.
But you have to look at the purpose of that capital. The ATM is tied directly to those multi-billion-dollar investment plans in Ohio.
So it's not just raising cash for the sake of it.
Not at all. They're recycling cash flow in this new capital right back into growth. It's all about building out that irreplaceable U.S. enrichment capacity.
So the trade-off for shareholders is a little bit of dilution today in exchange for owning a piece of a much more valuable, more strategic asset tomorrow.
That's the perfect way to frame it. And that brings us to their moat. Because the protection here isn't just about being a low-cost producer. It's regulatory, it's technological, and maybe most importantly, it's geopolitical.
Right. It's a really fascinating kind of moat. Where does it start?
It starts with being the first mover in HALEU. Centrus has the first, so far only, NRC-licensed HALEU production facility in the United States.
The Nuclear Regulatory Commission.
Yep. Just think about the years of work, the engineering, the compliance needed to get that license. It gives them a multi-year head start that is almost impossible for a competitor to close quickly.
And that ties directly into national security, doesn't it? This is more than just a business. It's industrial policy.
Exactly. This is central to the U.S. goal of rebuilding its own domestic uranium enrichment capacity.
Yeah.
For decades, the West let that capability shrink and became way too dependent on foreign suppliers, especially Russia.
A dependency that now looks extremely risky.
Untenable.
Yeah.
And the strategic importance gives Centrus all sorts of benefits. We're talking about guaranteed policy support, lucrative partnerships with the Department of Energy,
Right.
and advantages that a new company or a foreign competitor just can't get. They are becoming an indispensable asset for both commercial power plants and national security programs.
And they're not just waiting for government work. They're locking in private customers, too. I saw that partnership with Terrestrial Energy USA.
That's a crucial move. They're embedding themselves in the next-gen reactor ecosystem now. So as those new SMR designs get built, Centrus is already the go-to pre-approved supplier for their fuel.
And this isn't just a U.S. story. It seems like the whole Western world is waking up to this.
Oh, absolutely. Look at the UK. They've committed, what, over $500 million Canadian dollars to their own HALEU production. The entire geopolitical trend is to move away from Russian supply and build a secure allied supply chain.
And Centrus is perfectly positioned as the trusted American player in that chain?
With the license and the technology ready to scale.
Yeah.
It's a very rare combination.
Okay, so that's the fundamental story. Let's pivot to the stock itself. The technicals, investor sentiment, it's had a huge run.
It has. The price action is really strong. It hit a new 12-month high recently, and it's trading near the top of its 52-week range. That's the classic profile of a high-momentum leader.
What does that mean exactly, a high beta leader?
It just means it's a stock that tends to move more than the overall market, both up and down. And it also signals that smart money sees this company as one of the best ways to play the whole nuclear theme. People are willing to pay up for the growth story.
And even with that volatility, the long-term trend looks solid. I'm seeing strong support levels. The 50-day moving average is around 321. The 200-day is way down around 235.
And that structure is really bullish. That 200-day average, so far below the current price, acts like a long-term floor. It tells you that on any real dip, structural buyers are stepping in.
Sentiment seems to be getting a lift from institutional money, too. They uplisted to the main NYSE board. How big of a deal is that?
It's a very big deal. It's a signal. It improves liquidity, which means big funds can buy and sell more easily. But crucially, it makes them eligible for inclusion in major indexes and ETFs.
Which brings in a whole new class of passive institutional buyers.
Exactly. It creates a sort of steady structural demand for the shares.
I also saw that analyst targets are pretty positive, but the range is really wide. I saw one from Needham at $357.
Yeah, and those really high targets are all based on that operating leverage we talked about. The analysts calling for 350 plus are saying that today's earnings are completely misleading.
They're betting that once HALEU scales up and those fixed costs are covered, the real profitability will be enormous.
That's the bet. They believe the market is still mispricing that long-term earnings power.
So given all that, what are the big risks here? We talked about the ATM and dilution. That has to be number one on the bear case list.
For sure. The two big risks are dilution and execution. The $1 billion ATM is necessary, but it could definitely weigh on the stock if they use it too aggressively. But honestly, the bigger risk is operational.
Just get it done.
Right. Scaling HALEU production is incredibly complex engineering. There's always a risk of delays or cost overruns. It's not a trivial task.
But those risks seem manageable given their cash position.
Absolutely. That $1.6 billion cash buffer is a huge mitigant. They're not going to go broke if they hit a 6-month delay. And remember, the national security angle, the government needs this to succeed. So the risk of demand just disappearing is basically zero.
So looking ahead, what are the catalysts we should be watching for?
The big one is the next earnings report, which should be around early February of 2026. That's the test.
To see if that big revenue rebound actually happens.
Exactly. If they hit that consensus number, that 149 million, it will be a massive confirmation of the thesis. It'll show the Q3 miss was just timing.
And the uplisting itself is still a positive catalyst working in the background.
Correct. That became effective December 4th, 2025. So over the next few months, you should see more index inclusion, better liquidity. It provides a nice structural tailwind.
So putting it all together, how should we think about this as an investment? Is it a short-term trade or something else?
I think this is fundamentally a multi-year hold. You're looking at a 3 to 5 year thesis, maybe even longer, to really see the whole HALEU and Western enrichment story play out.
It's a rare story.
It's an almost perfect combination of political protection, technological leadership, and now a proven ability to execute. That makes Centrus a strategically indispensable asset.
It really frames just how important this is for investors and for global energy. If the trend toward energy security continues to dominate policy, this story is just getting started. Thanks for tuning in.
Don't forget to subscribe to Investing Talk podcast for more analysis on the companies driving tomorrow's economy.